Welcome to the Professional Edge. My name's Todd, tax attorney, CPA, and certified financial planner. And we're trying to figure out deciding to work with a registered investment advisor, some of the things you need to ask or consider. And a lot of individuals are purveying, quote, investment advice, or they're out there touting that they are helping clients with their safe and secure retirement. And unfortunately, the regulations regarding investment advice are all over the board. And being a listener here on the Professional Edge, I think you need to understand a little bit about the credentials of investment advisors. What we're seeing a lot is these property and casualty life insurance agents are now touting that they're doing retirement planning, and the magic shtick is a whole life insurance policy or a variable life insurance policy. Some of the key provisions of this is we're going to accumulate this cash value within the policy, and then you're going to be able to take this money out tax-free when you retire. So let's scratch our head and say, wait a minute, how am I going to get this tax-free income when I retire? How does this actually work? Well, the program is you overfund the value or the cost of that insurance, and therefore you build up this cash value. And then when you, quote, receive this money tax-free in retirement, you're actually making a loan against that policy. Now, one attribute of that is if you should ever let the policy lapse, then all those loans are then going to be treated as taxable income. So they run the numbers and they say, all right, we're not going to have the policy lapse, and therefore when you fund this policy over the next 15, 20 years of these significant annual premiums, then at the end you're going to be able to withdraw X dollars per year tax-free. Well, it sounds incredible, doesn't it? But when, as a registered investment advisor, we have to act in our client's best interest as estate management counselors. So when I look at these plans and programs, you got to look at the real numbers to see if this is in the best interest of the client. Well, when you look at the internal rate of return underneath that cash value and what it actually accumulates to, and then the tax-free income at the end, well, I'm not sure it makes the most financial sense for a lot of our listeners here on the Professional Edge. So if that's been the plan that's been presented to you, my phone line is open at 877-654-9798. That number again, 877-654-9798, to get a second opinion on something like this. I'm not sure I want to, have my entire, quote, safe and secure retirement based on a life insurance policy that I'm accumulating cash value to take out tax-free at the end. Now, how does this loan actually get satisfied? Well, at the end, when you pass away, then there's a death benefit, but before that death benefit gets paid, then the loan balance, which you took out during your life, is then put against the death benefit value. So therefore, your heirs is going to receive a very discounted death benefit. Now, those are the terms and conditions in a 30,000 foot view, and the numbers look amazing. These spreadsheets, these projections that insurance agents provide are amazing. It sounds great. Tax-free income in retirement. Wow, that's nirvana, right? But when you look at the overall rate of return, I'm not sure it makes a lot of financial sense. Again, being a tax attorney, being a CPA, being a registered investment advisor, we have to, at estate management counselors, being a registered investment advisor, have to act in the client's best interest. And I will tell you, on insurance products, we all know there is significant compensation to the insurance agent providing this recommendation or this policy. So again, following how the person gets paid, if they get paid for implementing this product, well, as an insurance agent, they do not have a fiduciary duty to act in the client's best interest. That is paramount. You want a fiduciary to champion what is right for you, what is in your best interest. So again, we're deciding on what we need to do to work with a registered investment advisor. So the other thing we look at is So we have insurance individuals saying they're helping you with your retirement planning. Well, they're an insurance agent. That only takes a 40-hour course that you can do on weekends. And then you take this standardized test and bang, all of a sudden you're a life insurance agent and now you're, quote, qualified to do retirement and investments. I'm not sure that really is true, and therefore you need to evaluate what the actual credentials are of the individual you're thinking about working with. So there's the insurance side of things. What about this certified estate planner, CEP? Well, that's again a mail order course. You do some work. I'm not even sure they have a standardized test, and therefore you can, quote, hold yourself out as a certified estate planner. Well, that doesn't mean they went to law school. Doesn't mean they're giving legal advice. So again, we got to understand what these credentials are. Being a certified financial planner, that there's core requirements. You got to do fundamentals. You need to do investments. You need to do insurance. You need to do estate planning and then tax planning. And then there's a standard national test that individuals have to pass in order to hold themselves out as a certified financial planner. That's a little bit more robust on the planning side. But again, being a CFP in and of itself doesn't mean that they have a fiduciary duty to you, the client, in making their counsel and advice and recommendations. You need to be a registered investment advisor. Now, there's two levels of the RIA. One is on the state level and one is on the SEC level, the federal level. Depending on the number of assets in which you're managing, then it's either you're underneath the state registration, or if you have a good amount of assets under management, $100 million or more, then you have to be registered with the Securities and Exchange Commission. And as state management counselors, we are registered with the SEC. We are proud that we had an audit as late as last year, and knock on wood, we passed that audit with 0 findings. So again, I say that because that's another inquiry that you, in deciding to work with a registered investment advisor, or who you're going to get counsel and advice for your safe and secure retirement, need to ask that question. And there's a broker check link that you can look at and see if there's any filings or complaints. And that's another thing that we provide to our clients and say, go ahead and check our record. We're proud. There's been no marks against us. So again, it's a broker check to see if there's any claims or any controversy regarding the person you're thinking about working with. So that's another thing. Got to make sure who you're actually dealing with is not a scoundrel, because it's your money and you are responsible for planning your safe and secure retirement. So again, deciding to work with a registered investment advisor, for a lot of the listeners here on the Professional Edge, that's a big step on getting assistance, getting counsel, getting advice regarding your money. Everyone's pretty quiet, pretty private about their money. But as soon as you develop a working relationship with, and again, I strongly recommend a registered investment advisor, because they have that fiduciary duty to act in the client's best interest. They're not salesmen. Whereas stockbrokers, they get paid for what they put in your portfolio. That's commission based, and you know, it only has to be suitable. So if the one thing you take away, just understand, as a stockbroker, they only have to provide what is suitable for their clients. As a registered investment advisor, they have a fiduciary duty under law to act in the client's best interest. So weigh those two. You're a smart individual listening to the Professional Edge. See what makes the most financial sense for you in your best interest. So when we turn this back over and we say, okay, deciding to work with a person to help you with your portfolio and your investments and plan for that safe and secure retirement, The other thing is, I'm not sure it makes financial sense to, quote, just turn your investments over for someone to manage. That, I think, is a recipe for disaster. And in my opinion, I don't think you should ever do that, or do these separately managed accounts to where, quote, you got to have $250,000 to qualify for this program. And then we're going to have these separate managers manage your account, and they're up in Boston or New York City or California, wherever they might be. And then lo and behold, that gets reported on your monthly account statement. And man, it sounds great. They have a glossy brochure. Sounds impressive. But again, what are you getting for your investments? What counsel and advice are you getting? You're basically handing that $250,000 over and letting them do carte blanche with your assets. That doesn't make any financial sense to me. So again, you want to stay involved and understand, probably not to the level of your advisor, but at least understand what your money is doing, what sectors they're in. Are you in energy? Are you in industrial materials? And that way you stay involved, because guys, when you're listening, most guys handle the money in the households and their wife participates some. Well, when you're gone, who is going to help your spouse manage this portfolio and make the right tax decisions, right? Make the right investment reallocations, because things are changing. So where is that relationship going to be? So to start that relationship, we offer a free consultation. We also have an incredible opportunity for our listeners on the Professional Edge. And that opportunity is emcthebundle.com. That is Echo Mary Charlie, thebundle.com. And we've combined to where we put your estate plan together to make sure it's done right, being a licensed tax attorney. Then we also do your retirement and investment allocation review. And then we also do some tax planning with that, so it's all integrated. Actually, an exceptional bargain for listeners here on the Professional Edge. North of 10 grand of value, and that's right at 3 grand. So again, if that's of interest to you to start a relationship, do go to www.emcEchoMaryCharlieTheBundle.com. Or if you just have some other inquiries and your estate plan's, quote, done, I will definitely want to look at it one more time, because I've seen errors and omissions. So when we come back, do give us a call at 877-654-9798. That number again, 877-654-9798. Appreciate you listening to the Professional Edge. My name's Todd, tax attorney, CPA, and certified financial planner. More coming up about how you decide to work with a registered investment advisor.
We've all thought about it. Everyone listening will need one. Not having one can cause untold heartache, family conflict escalating to the point of a lawsuit. One simple thing that avoids all that: an effective estate plan. As a practicing tax attorney, Todd with Estate Management Counselors has completed over 1,000 estate plans during his 15 years of professional practice. He can help you implement an effective estate plan, coordinate your financial accounts, and make sure you have named the proper beneficiaries to maximize your tax savings. Call 877-654-9798 today and let tax attorney Todd help you implement an effective estate plan. Call 877-654-9798 today. As a tax attorney CPA for over 15 years, Todd has implemented over 1,000 individual estate plans. He has recently authored an especially helpful guide, How to Unlock the Ultimate Estate Plan. This guide has helped many individuals to understand the benefits of an estate plan and how to avoid unintended disasters. has made every attempt to write this in plain English. To receive this valuable guide, How to Unlock the Ultimate Estate Plan, call 1-877-654-9798 and request your complimentary copy today, or by emailing your request to info@emcadvisors.net.